Now, at the end of this video, you'll know why the 1099-DA may look wrong, what it covers and what it doesn't, and exactly what you should do so you file correctly and don't get steamrolled by automated notices. Stick around, because the last step is the difference between filed and defensible. You're going to see a new form this season, Form 1099-DA, and a lot of people are going to panic or pretend it doesn't exist. Both reactions are how you end up paying tax you don't owe, or getting notices you didn't plan for. This isn't complicated, and it's not only for whales. But here's the myth. My 1099-DA is wrong. I can ignore it. No, the IRS gets a copy, so you'll need to reconcile it, not pretend it's not there. At Numeratus, we specialize in modern money compliance, crypto accounting, documentation, and making your reporting defensible. We don't guess, we construct the truth across exchanges, wallets, and on-chain activity. This year is rough because 1099-DAs are brand new for 2025 transactions. Brokers generally report gross proceeds in 2025. Basis isn't required yet, so mismatches are expected, but the IRS matching systems still compare what was reported with what you filed. Now, at the end of this video, you'll know why the 1099-DA may look wrong, what it covers and what it doesn't, and exactly what you should do so you file correctly and don't get steamrolled by automated notices. Stick around, because the last step is the difference between filed and defensible. Let's start with the basics. Form 1099-DA is a broker reporting form for digital asset dispositions, sales, and certain exchanges that brokers send to you and the IRS. It applies because the Treasury and the IRS finalize broker reporting rules under the Internal Revenue Code, and 1099-DA is the standardized form to deliver that reporting. And yes, this is the first real rollout season for many taxpayers because it's tied to 2025 transactions being reported during the 2026 filing season. So here's the core issue. 2025 is proceeds heavy, but basis light. For 2025 transactions, brokers generally must report proceeds, but they are not required to report basis for sales affected in 2025. So the form can show a giant number that looks like income, when in reality, it's just proceeds, not profit. Brokers only see what happens inside their walls. Even under the rules, a broker may only know what is affected for you. It may not know what happened before the asset arrived or after it left. So if you bought on exchange A, transferred to a wallet, then sold on exchange B reported proceeds without knowing your original cost or basis. That creates mismatches that are expected this year. The form doesn't cover your entire crypto life. The final regulations focus on custodial brokers that take possession of assets. Non-custodial, DeFi-style brokers are not covered under this final set, with Treasury indicating separate rules later. That means your 1099-DA may be both over-inclusive in some ways, like proceeds without basis, and under-inclusive in other ways, missing certain activity that is taxable and reportable. So you might hear, if it's wrong, I'll ignore it. This is a trap. This is where people get hurt, because the IRS receives the broker copy and uses automated matching systems to compare information returns against your tax return. A mismatch can trigger a notice like a CP2000, which is an automated proposal based on third-party data, and you cannot ignore it. Non-response can result in an assessment plus penalties and interest. The correct move is file the truth, reconcile the mismatch, and document why. So here are some guidelines you could follow. Keep it tight. Collect every 1099-DA, and don't assume one exchange is the whole story. If you traded on multiple platforms, you may get multiple 1099-DAs. Step 2, treat every 1099-DA as an input, not the answer. 1099-DAs do not replace your duty to report capital gains and losses properly. This is typically done on 8949s for Schedule D in many cases. It's a reporting fee. Your job is still to compute the actual gain loss under your cost basis and law history. Step 3, build or repair your cost basis and transaction history. Because 2025 broker forms often show proceeds without basis, you must substantiate basis from exchange trade history exports, wallet histories, on-chain records, prior purchase confirmations, and transfers between platforms. Step 4, reconcile mismatches. Don't force them. Mismatches happen for predictable reasons. There's missing basis, transfers misread as sales, partial visibility by brokers, and activity outside broker scope. Your goal isn't cosmetic alignment. Your goal is accurate tax reporting with a documented reconciliation. Step 5. Prepare for the next phase. Basis reporting begins later, but not evenly. The regime phases in. Gross proceeds reporting for transactions on and after January 1st, 2025. Basis reporting for certain transactions on and after January 1st, 2026, with nuances around covered versus non-covered assets and what brokers can rely on. Translation: this is not a one-year pain. It's a new operating environment. So here's the bottom line. I want you to deliver cleanly. 1099 DAs being incomplete does not make it optional. It's still filed with the IRS. There's a triangulation. And your return still needs to be accurate and defensible, especially because 2025 is proceeds forward and basis light. Ignoring it is how you end up overpaying tax because you treated proceeds as profit, or getting a mismatch notice because your reporting doesn't reconcile with third-party data. If you want to close strong, if you're crypto active and your 1099 DA looks wrong, that doesn't mean you're doomed. It means you need reconciliation. At Numeratus, we build the transaction truth. We pull exchange records, wallet activity, transfers, and lots, then produce defensible reporting you can stand behind. Because the IRS isn't asking if your crypto was complicated. They're asking if your reporting is provable. And that's the difference between stress and control.